Walt, you had quite the week as a TMT analyst covering the markets. Your good friend, Tim Cook, he made his way to the Oval Office, and boy, oh boy, he brought gifts. But could he put them together? I don't know. But in our world of autonomy, Uber and Lyft reported, and something happened because lo and behold, I check my inbox, I get a note from you. What happened? What sparked you to put pen to paper?
You're right, Grayson. I did write a note. And as an aside to our listeners, check out Patrick McGee's book, Apple in China, to get a better sense of really how Apple is manufacturing products and what they've done in China. But on Uber, you're right. We don't at Lightshed do earnings previews and reviews. We leave that to the big banks. But when I was listening to this Uber call, which was about 40 minutes long, a little shorter than normal, it just seemed to me like they were playing up share repurchase and playing down investments in autonomy. They referred to them as making modest investments, or that they were going to recycle, which means reuse investments in existing autonomy networks or autonomy investments. And we're focusing more on capital return. I just thought that was not necessarily the right narrative for the company to do this.
I heard things a little differently. I had my autonomy cheerleader hat on. You had your Wall Street finance analyst hat on. And I heard a few things that I thought that the team at Uber might have been listening to Autonomy Markets, because it was right out of the Walt playbook. The stuff that you say here, they say. I want to break down some of the comments here that Dara and the team made on the call. Let's start with this comment, get your opinion on it. I do think that you will see us do more deals like Neuro, Lucid in the early days of autonomous, as we are proving out the economics of the marketplace. That clearly sounds to me like there's more autonomy deals coming.
I think that's fair. And maybe the true translation here is they know these investments are coming. And when they hit the tape, they want to at least be able to have set the stage for investors of putting them in the context of all of the money that they're utilizing for share repurchase. So it's possible that this was just kind of like a Jedi mind game of, saying, hey, we said on the call we're going to do more investments, but remember, capital return is still a primary, focus for the company. I just would have liked them to lean in more, to the investments in autonomy, especially given everything that's going on with Waymo and how people believe that one way or another.
I thought in the call they did a balanced job of doing that. And I put on my Inspector Cousteau hat on, because you know me, I like to go undercover and read between the lines and do things. And there was a line on the call, again, right out of your playbook, and I want to read this to you and quote, "Once we prove out the revenue model, how much of these cars can generate on a per day basis, there'll be plenty of financing to go around and third-party financing. We've talked to private equity players. We've talked to banks, et cetera, et cetera. And while it will take some time, we're very confident these assets are going to be financeable." It sounds like the REIT model might be coming to become a reality very soon.
Yeah, and again, that gets to this point of them emphasizing that long-term they'll be asset light, which is why you should be like, look, we're willing to use billions of our free cash flow to own cars in the near term, because I agree with what Dara is saying in this statement that they will be able to offload these assets. So rather than, again, talk about recycling and using modest amounts, be like, look, we might need to make large investments now, but we'll be able to offload them at a later date. So my question to you, Grayson, is who do you think is ultimately going to end up financing Uber's autonomous vehicles? And are those vehicles going to be bundled with assets like real estate or whatever to make it more appealing to the overall investor or the investment?
I think it's going to have to be a bundled package. Perhaps if you want to buy it, autonomy in a box, you get the depot real estate, you get the vehicle, and perhaps there's some sort of service contract on there can start to generate cash flow. Perhaps we could see it as a PE firm. Perhaps we can see it in some specialized fund. But I think that there's a lot of interesting opportunities there. I think there's money there. There's clearly interest in the market. You're based in New York. You have access to all these individuals. What do you see? Do we see a landscape or an HVAC roll-up very similar to what we've seen happening in private equity today?
Yeah, but on the real estate side, you're going to get better capital when you don't have movable assets unless there's some change in the tax law. So I think there will be some segmentation there. And there has been, I think, if you look at what's happened in telco, where towers have turned into REITs, and then you have different banks coming in financing the handset payment programs. But that just underscores that financial partners will come to play. But the challenge, though, in the near term, Grayson, is someone's got to put capital up today to get the OEMs to do things. And again, putting my telco hat back on, years ago, you'd have to, commit to buy 1 million or 2 million phones from BlackBerry in order to get them to make it for you. Frankly, that even happens with Apple today. I'm sure Dish, trying to enter the wireless market in the United States, has committed minimum purchase commitments to Apple in order to get them to make an iPhone. So think about Apple. This is a well-financed, huge company. Now apply that to an OEM or a car manufacturer. You need someone today, and Dara can talk about, as you said earlier, these banks that they're talking to, but they haven't stepped up today in the Neuro or the Wave deals, right, in terms of being that financial partner. So if on one hand, Uber gets on this call and says the limiting factor to autonomy growth is OEM capacity, more so than regulatory, then put up the capital to do that, right? So and embrace it and tell investors that that's coming. Don't call it modest investments. Say these are big investments that are coming. Grayson, you're all over the regulatory front. Do you even believe that OEMs, like I do, are the limiting factor in terms of growth here, more so than the regulatory challenges that obviously exist?
There's regulatory challenges, but there is a very clear path forward with the regulatory. As we see in the leadership under Secretary Duffy, Secretary of Transportation, as we've seen now the White House with President Trump, there's a very clear path to getting a national autonomous vehicle framework. Does that happen? I don't know. I'll give it a 50-50 odds at this standpoint, and the bullish part of me says I'll give you a 60 to 62% odds that it happens in the next 2 years. And if you look at the state level, there's a lot of positive movement on the state levels for the regulatory. So the regulatory environment to me is not a concern. It's the OEMs, and are they willing to invest in this technology? And I say that with a caveat because there are OEMs that are doing it. Hyundai is clearly going all in and investing. I say with Waymo and with AV Ride. Ford and GM, on the other hand, they have pulled back. So do we see a divergence as it relates to the OEMs in terms of who is going to invest in this? And if they do, does Uber have to act as a guarantor to get them to make more of these vehicles? That's a big question that's out there.
Yes, and I think there will be winners and losers, and OEMs, and we've talked about this in prior podcasts as it relates to Aurora and the issues that they're having with PACCAR and Volvo. Like the ones that are willing to move forward or incentivized by having someone like Uber that has this strong balance sheet to invest, they, I think, are going to position well, because I'm very bullish in terms of what can happen as long as they can make the trucks. When I build my 5 and 10 year models, trying to figure out mix of miles that are going to be autonomous, it ultimately ends up being a bottoms up and thinking when the OEMs can step in. And by the way, one of the things that no one is even mentioning here is, like, does the technology even work, right? We only really have Waymo in the market at scale. And no one even questioning that these, host of companies are going to actually get the technology to work. And furthermore, like, from Lyft's standpoint, they're very confident about technology. I think here's a quote from their call: "There's no world where there will be just a small number of AV providers. You've got the guys owned by Alphabet, Zoox, WeRide, Pony, Wave, Mobileye," which their note is a partner of theirs, "and Baidu." So in Lyft's view, Grayson, even though they also said that they were going to be very selective in their investments and don't want to invest in something that's going to blow up in 2 years, but they said there's no world that there's just going to be one or two or three AV providers. Thoughts on that?
There's no world and where they're right. What we're going to see a handful of operating systems. You'll have the Wave system, the Neuro system, the Waymo system, the Tesla system. I'll give you a point blank. I'll give you a number. There's going to be most likely around 6 autonomous driving providers for vehicles. Then you'll probably have 4 providers for trucks, and then you'll have others specialized in off-road, in mining, and all that. And those numbers, not going to be a prediction on, but for the handful of Lyft's market, you're going to have 6 core providers. You are not going to have a mass amount of providers.
That's a lot. I'm not even sure there's going to be 6. I think a market like this, it ends up getting whittled down from a technology perspective. But we'll see. And by the way, there's no way that you can. I don't want to say no way. It is a challenge for Lyft to be selective in trying to figure out who the winners are today or tomorrow. I think, that's still an open game. We have great optimism for all these companies. And as I've said many times before, AI changes that. My question to you, Grayson, is in terms of who you invest with or when you invest with them. Let's flip it, forget about Lyft for a second, the true beast in the market, Uber. Do you explore financing only if you caveat that the vehicles run exclusively on the Uber platform? What is the right model in your mind in terms of tying exclusivity with some of these investments as they occur?
I would totally explore the exclusivity. Why would I want to fund a competitor that could potentially outmaneuver me in the market? I like the idea. If I'm going to put the capital and I want exclusively to run on my network, and I'm saying that as if I'm Uber.
But consider this counterpoint. I mean, the really big issue here, I think, is, at least in my mind, is like, okay, you've got Waymo, who is the leader and huge financing behind it. You have Tesla, a lot of financing behind it, a lot of smart people. At the end of the day, if you're Uber, you want these other guys to survive and have as much demand as possible, enough partners as possible. So if you tie them into exclusivity, that sometimes limits the ability for those companies to be successful. So does that change your view?
That's a very valid point. Well, how about this? I'll give you a little pushback. What do you make the exclusivity for the certain amount of vehicles that you finance that can only run on your platform, and then allow those companies for vehicles that you do not finance to run on other platforms?
But if you're Uber with the big check, you're going to be financing a lot of these guys. Like, you bring the check, you bring them on. You want to do that for survival. And not to mention, like, at some point, do you really, and I don't think this is going to be a big issue, but do you want to invite the government coming in, and challenging you for any type of exclusive deals? Again, don't think that's an issue unless you're a company like Google, but certainly something to consider.
It's a risk, and you know it all too well from your telco days of what can happen with the FTC.
Grayson, the other thing I wanted to talk about is this concept of recycling. So, I mean, if you size the investments for these companies, you're not talking about a ton of capital. So if I just bring up I did a table in our note, and if you look at what Uber's invested in, you have $3 billion of value in Didi, close to $3 billion in Grab. Then you have Aurora, net of what they basically already loaned, which is just $1 billion. And then, you can list Delivery Hero and Joby and we all these different things that they've invested, but that amounts to what, a couple of $1 billion? In the context of a company that can generate, what, $10 billion of free cash flow? Granted, they have now allocated half of that free cash flow that they say is going to be returned to investors, but $5 billion per year compared to, a couple of $1 billion of recycled value assets. And then I'd say, like, if you're that company, if you're Aurora or WeRide or whoever that they, may, if they're going to put money in there, I don't know. Sorry, they didn't put money in there, but any of these smaller companies, what signal does it send to the market as those companies are trying to grow to have such an important strategic partner pull dollars out? I mean, we saw it already happen with Aurora when they pulled dollars out of there. If you're that company, what's your reaction?
I'll give a market opinion from the Autonomy Markets opinion, not from the Wall Street perspective. I'll give it to you from the insider and Autonomy. It doesn't look good. It causes a lot of questions to be asked, a lot of individuals to question what's going on. And it opened up what does Uber know that we don't know? And I asked this specifically about Aurora because we saw the announcement from Aurora and Uber with the financing. And then a couple days later, Sterling Anderson resigns. We didn't know where he was going until we found out a few days later that he went to GM as chief product officer. That lit up the rumor mill. People started chatting about it, trying to figure out what's going on. So from the Autonomy insider perspective, the optics don't look good, and it just leads to tons and tons and tons of what questions, what does Uber know, what does Uber know? Is that company's tech not working? It just leads to questions upon questions.
Right, and that is something that you would wonder if that has an impact on PACCAR or Volvo in terms of how they dedicate resources to production in Aurora's case. Similarly, if Uber wanted to pull back on the investments that they're making, and let's say the Wave relationship, wouldn't that have a negative impact on Wave's ability to cut additional OEM deals. And again, that's not a positive for Uber that should want these companies to flourish. There shouldn't be this concern that these stakes or partnership dollar investments are going to retract. There should be some indication that that's going to continue.
But I'm going to ask you from your Wall Street perspective, why recycle when the free cash flow is clearly growing and the free cash flow supports the buyback and supports additional investment? So why do the recycling?
I just think it's a statement that they threw out there because, rather than a lot of people are lazy and they just don't ultimately do the math. It's just something that's to downplay the capital that I think is probably going to still get allocated to autonomy. Like, don't worry about the free cash flow. It's all about share repurchase. We have recycling and we will use some of the free cash flow will be modest. We'll see. We'll continue to track that. But I think it's all about, stocks, especially big ones like this. It's always about the narrative. And obviously autonomy, is a primary narrative that they have. But again, your stock's up 50%, almost at a 52-week high. Your narrative's been pretty good. And your investments, I think, have been pretty good. I mean, look, the other thing here, Grayson, is all of this to me, honestly, seems to be addressing what I would think is the elephant in the room, which is the Waymo relationship. And, no fault to the company. This was some investors that took this Yippit data in Austin, after Uber, jointly launched Waymo in Austin. And we're like, oh, this seals the relationship. The company wasn't pushing that narrative. So, when Dallas was announced with Avis and not with Uber by Waymo, then it brought up these questions. So I think, honestly, like all of this call and this discussion is about tempering people's concerns about that Waymo relationship. What are your thoughts?
I want to know what you learned on the call, but if you look at it from a messaging standpoint, and I'm going to give you the autonomy insider perspective again, it goes back to the question asking. Okay, so Uber has a relationship with Waymo in Austin. Uber has the relationship with Waymo in Atlanta. Then all of a sudden we see Waymo expands to Dallas. Great. Well then, subheadline with Avis budget. Oh, okay, where'd that come from? And then I put on my Walt hat and I dialed in and listened to the Avis call. And their CEO talked all about fleet management and willing to invest in real estate, willing to invest in vehicles, and wants a long-term commitment. Then the CEO, also on the Avis call, talked about meeting and vetting several companies and ultimately choosing Waymo. So that was very interesting there. What did you learn on the Uber call from the Uber perspective on this?
Well, on the Dallas stuff, I think it was more of just kind of damage control. The quotes like, don't read too much into Waymo expanding independently in Dallas. That's consistent with their strategy, which I agree with. And we've been saying this all along. And then back to Dara. It doesn't signal trouble with our partnership. Also, I agree with that. Announcing a Neuro or a partner X also doesn't mean things aren't going well with Waymo. Our strategy is to work with many players. Again, 100% agree with what Dara is saying here. But I think, for them, it was addressing that, like, things are confident. To me, I would have addressed it differently. I would have been like, look, restate this stuff about Waymo, but also talk about how it's important to continue to invest in the ecosystem because we don't know what the end game is. Or we think Waymo is ultimately going to have to use this for X, Y, and Z reasons, maybe part of it being the investments we're making in fleet management.
It comes down to communication and narrative. And no matter what we think that Uber's trying to communicate, Lyft is clearly communicating that they want to lean into autonomy. You dialed into their earnings call. What did you learn on the Lyft earnings call as it specifically relates to autonomy?
Interesting in that, like, Lyft, who doesn't have the same balance sheet as Uber, seem to talk more about buying cars and their willingness to own these assets. And here's a quote: "We will buy cars, not hundreds of thousands, but thousands, absolutely, just like we do today with FlexDrive." I would have loved if Uber said that. This is coming from the Lyft call. And then he goes on to say, Richard, we're already a vehicle owner through FlexDrive, so buying some AVs is not a big stretch for us. It's meant to jumpstart markets and give a sense of commercialization to organizations like Baidu, which have poured millions or billions into R&D. 100% true. And by the way, I think Uber agrees with that. They just aren't as willing to, I think, embrace that and say that on the call.
But how? Lyft's balance sheet, with all due respect, Lyft, it's minuscule compared to Uber's balance sheet. So how is the the little guy saying this? Is this a David versus Goliath fight? What's going on?
They temper that by saying they're going to be selective and saying like in Baidu and others is they're going to choose a small number of partnerships where there's genuinely, in their view, a win-win dynamic and long-term alignment of interests. I mean, I don't know if you can be totally successful in that. Here's another quote. I think I referred to this earlier. We don't want to throw a bunch of money or energy into something that blows up 2 years later. I mean, good luck. These are early tech companies. Like, there's a lot of factors that can determine their success. And frankly, some of those factors include getting capital to get the OEMs to ramp up their production lines, which Lyft, even if there is a limited number of partners, that you don't necessarily have the balance sheet to drive that.
Walt, you missed it. I'm sorry, you're so focused on the share buybacks, you missed the big autonomy news that Dara said on the call. And I want to read you a quote here from Dara. I'm going to give you that pushback right there in the ribcage, okay? And I'm going to quote Dara here. We're confident that over the next couple of years, we will have OEM partners again, because we bring a ton of demand. We've got a great balance sheet that we can invest in order to prove out the financing of these models. We think we're in a great position to do so. So stay tuned. You'll see more announcements with new OEMs. There's more deals coming. So there's the pushback. I hope your ribs are okay, because I gave you the pushback.
I think that is very fair. Like, these are quotes. This is what they said. And maybe I was just too oversensitive to the share repurchase. And maybe it was this balance because Dara was sneaking in there saying like, yeah, we are going to be doing these OEMs, but it's going to be a combined approach. So I take that criticism, and you're right. You're right. I think they did talk about these investments. Let's go back to Lyft's selectivity, however, to get off me and my wrongness, and this deal with Baidu, because while they'll do limited, Baidu, obviously a huge company, to deploy autonomous vehicles, they're going to do it in UK and Germany on the Lyft network. Here are some of the deals. The initial fleet's going to be hundreds of Baidu RT6 vehicles, scaling to thousands. They're going to start in 2026, like I just said, in Germany and UK. What are your thoughts on Lyft and using this to expand in Europe, where they've traditionally been, a U.S. company?
The European market is now the Chinese AV market. They're clearly taking over. Uber's doing the same deals. I believe the Baidu vehicles in Germany will roll out at some point in 2026. The UK, I'm not so certain, and you know this better than anybody about all the telco issues that the UK is facing with Chinese hardware. So I would say UK, I doubt that's going to happen by 2026 if it ever happens because of national security concerns. Germany, it's going to be very interesting, but this goes to the overall the influence that China is having in Europe as it relates to autonomy. And if I'm the German auto industry, where do I go from here? That's the question that I have more than anything.
I mean, Germany, I noticed there's that company, I forget the name of it, but they basically do the remote driving, which they had to do it in Las Vegas because Germany wouldn't allow them to do it, even though it was a German company. They finally let them back in the country. So maybe there'll be some changes as they see technology moving. My other question for you is FreeNow, was the acquisition that they made? It's a big brand in Europe, but they indicated on the call that over the long term, they're going to basically shift to the Lyft brand in Europe. Do you think that's the right decision, or should they just continue with FreeNow forever?
I think if you gradually segue the brand into the market, is a good idea because it unifies it. So an individual traveler in America going to Europe will know the Lyft brand. They won't necessarily know the FreeNow brand. And I think, and then putting on my regulatory hat, from a regulatory standpoint, it will start to help Lyft build trust with the regulators as they go through that transition. So if it's done and executed right, I think it is a very good transition. So that's my opinion on the brand. But what else did you learn on the call? Did you get any insights into fleet management since multiple calls and multiple quarters? Lyft's really been hyping it up with FlexDrive. Did you get any insights into fleet management of how they're going to manage all these AVs on 2 continents?
Yeah, I mean, I think both companies stated it. Now, I think going with your kind of theme of Uber indicating investments in a variety of topics that support autonomy, Uber CFO said they expect us to use some of our cash flow in a more capital structure as we may need to invest in either real estate and facilities, as we announced with Lucid, also in vehicles. So there's, again, something that supports what your point has been. And Lyft also, fleet management is unsexy but essential. It means buying, onboarding, maintaining, charging, cleaning, and maximizing vehicle uptime. So I think both of these companies are signaling to the market this importance of this third leg of the stool, maybe fourth or fifth, but the important leg that you and I have covered, pretty aggressively on Autonomy Markets, including, when we reviewed that Waymo facility that was getting deployed in Austin.
And another big part of that is going to be maintenance. What did you learn about Lucid as it relates to the maintenance of the vehicles on the call?
Well, I think part of the thing that you and I have talked about is the power issues, especially as you try to enter the Northeast. In order to get like an Waymo center light there, can they bring power? So it was interesting that Uber played up the battery life of a Lucid, and specifically just talking about how they can provide much less trips to recharge and get serviced. I think this kind of ignores that they still have to come in to get cleaned if sensors get knocked out of whack, but those types of service centers don't need power. And I think what we've learned is power is the limiting factor. I don't know if over time you're going to see many EVs trying to hit those same type of 400 miles or whatever it is for the Lucid. I'm not sure that's economically the right way to go, but at least for now, it's kind of a reason for why you would partner with someone that has a longer battery life, just given the challenge that you have in creating recharging stations in the places where you're going to need them.
Absolutely. In Andrew Chapman on the Road to Autonomy podcast, he talked about from Neuro's perspective that battery life allows them to do is pretty tremendous. Did you learn anything else on the call as relates to Lucid and Neuro?
I think only just, that they talked about it being very spacious. I think there was one comment that Uber made that was very surprising to me. And I think, because I think people have pushed back on the expense of this version of the Lucid, which is being very high. And they said Uber expects better economics than any of its existing agreements. And again, due to this platform and efficiency and range. So I think they're speaking to the total cost of ownership, where yes, it costs more, but if we have to charge it less or service it less, it's on the road, and we look at that total cost of ownership, it's factoring in. I just don't know if that is going to be the case long term. I'm kind of more of a believer of cheaper, purpose-driven vehicles, smaller batteries, and just that the infrastructure will get there in time. But it's definitely an interesting data point from Uber, who has the math, right? They see the numbers and the costs associated, with having to send these cars in and out of depots. And again, that just underscores the importance of fleet management and having partners that have locations, throughout these markets that they want to expand into.
I like the vehicle. I like the deal, and I can't wait to ride in one together with you. We got two topics left. We got Aurora and we got Zoox. But Walt, you had the Aurora show, not the Truman show, not the real life Truman show. Nobody's following you around. You had the Aurora show going on. You had the monitor over here watching the Aurora truck basically 24/7. What did you learn from turning into the Aurora show?
Grayson, as I'm sure you might have seen on trading desks, people have multiple screens set up. So I've got my Bloomberg, and I've got the Twitter and the email and the texting. And one of those screens I've now allocated to watching this Aurora live. And, some of it's replay. They switch every 15 minutes. Some of it's development rides. But it was very interesting. I mean, I've seen the trucks operate in the rain and the dark, not like pitch dark at night, but these are what they would call the development rides. So it was operating while I saw the driver. There was some of the videos where the video was on the driver. I saw him eating snacks. I saw the truck on some local roads. And I saw it slow down in one case. There was a truck on the side of the road. Surprise, surprise. That truck that was parked on the side of the road didn't have any safety triangles. Never seen a truck, I don't think, with safety triangles, even though they were trying to jam up Aurora on that earlier. The truck was typically driving at 65 miles an hour. Even in a 75 mile an hour zone, they were driving 65. But I think Aurora has explained that as they're doing that for gas mile efficiency. So overall, I mean, I was generally impressed, with what I saw on these videos, and definitely that, what they call the observer, which is sitting in the driver's seat, is not sitting there with his hands on the steering wheel. They're sitting back, eating snacks, doing whatever. So I think I generally came away more positive after watching these live things for multiple days.
I think whoever came up with the idea is brilliant. Jake, if it was you, sir, it's a brilliant idea. Chris, it was you, it's brilliant. I like the idea of that because it's creating transparency because Aurora needs transparency because they have two partners and we don't know where they're going to go with those partnerships. There's a lot of questions there. The one question putting on the Autonomy Insider hat that everybody asks about is, does Volvo Autonomous Solutions ultimately end up competing against Aurora? And so there's a lot of questions that I have with their business model, and I'd love for the Aurora folks to give us some clarity on, is Volvo Autonomous Solutions going to be a partner or are they going to be a competitor long term? That's something that I'm really watching to see if we get some clarity on.
The more we do this, the more we get transparency from these companies, and we appreciate that, and we think that's ultimately positive. But we'd like to get more transparency for sure from Volvo, given some of the things that we've read on LinkedIn and elsewhere about their autonomous group. So, I know there's some Volvo listeners. We'd love to come and visit your plants as you promised us, and let us know, and we'll be down there in an instant. But Grayson, why don't you tell us, let's move on to the next topic, Zoox, one of your favorite topics, the Zoox mobile, which just got, I believe, a huge approval. Some big exemption. Is that true, Grayson?
That is true, and congratulations to Team Zoox on it. The Zoox was granted from NHTSA a demonstration exemption, which that means, in a nutshell, it allows Zoox to deploy the Zoox mobile on public roads up to a certain amount of vehicles per year. However, there's a big catch, and the name of the show is Autonomy Markets. Big catch. They cannot charge for commercial operations because they do not have a Part 555 commercial exemption. So Zoox can put out and give free rides, which they are doing in Las Vegas, as I called it a Disneyland attraction, but they do not have the ability to charge yet. Good step forward, still need to have the ability to charge.
Do you consider charging $4.20 a ride an actual charge?
There is a transaction that bills your credit card, so there is a financial transaction. So yes.
Well, I hear you. I don't think we should fully blame Zoox for this. This is just, I think, regulatory nonsense in terms of you're going to give them this exception, but then not let them charge. I know those were the last two we have, but I just want to bring up one other thing, Grayson, which is, we've talked about whether autonomy expands the market. And I think historically Uber has downplayed this and said that, in Austin or even in San Francisco, the growth in the market was really just more like marginal and tourist, and it didn't change. And I think there was a definitive tone change this quarter from both companies. First, and maybe it wasn't as much of a change from Lyft because Risher is always super bullish. We'll get to his comments later. But from Uber, they said we are seeing statistically significant trip growth in cities after AV launches, citing Austin. Again, that's different than I think what they said before. So I think that requires a bit of a follow-up for what's different than what's new from when I think before you said it wasn't that much of a growth and it was really just tourism. There was additional quotes, categories expanding, and all of that expansion accrues to us since competitors don't have AVs in the city. So they're saying it's expanding the market, but just to them. And then the other thing they talked about, there's the halo of AV. Now, when I've heard of halo in the past, this is the iPhone halo, right? iPhone is great, so now I'm going to go and buy, Max or whatever it is. And so they got pushed on that in a later call, and their response was there's a data science team that tracks the effects that has confirmed positive deviations from baseline growth projections, meaning that somehow you're in the market in Austin or wherever and you have AV, and now people want to go and use Uber in general more and use Uber in terms of the regular humans because you have the halo of being that technology forward company. Just what are your thoughts on that before we get to what Risher said about industry growth?
My thoughts are very clear. Consumers like autonomous vehicles. That's what's leading to it. It's a consistent experience. It's a reliable experience. There's no driver. They like the product at the end of the thing. And it tells me that every stinking poll out there, AAA this is right directed at you, is wrong. Consumers are accepting of autonomous vehicles. That's what that also tells me.
But the halo is like, do you think that because they're associated with AV, that this is driving more rides for their human cars or for Uber Eats or anything else just because the brand is enhanced in that market?
I don't buy that for a moment. I'll call that corporate marketing speak is how I would summarize that comment.
I think I'd agree with you, and based on how the question was answered on the pushback, that might have been a slip up in saying the halo. Let's move on to Rideshare. Love how Rideshare delivers messaging. AVs are a massive TAM expander for rideshare. In markets where AV operate, industry growth is 5 times greater than other top markets. 5 times greater. Again, in marketing, this is like a specific number, but do you believe that the industry growth in like San Fran was 5x just because you've got Waymos, riding around there?
I'm not sure if it's 5x, but I believe that there is an increase in the market because it offers a consistent product. Where somewhere I might have driven, and I was like, oh, now I can get a Waymo. Great. So that increases me from being a driver to being driven. So yes, there is some increase. Whether it's 5x, I'm unsure.
Maybe it's like, okay, in some of these markets which were larger and more mature, the prior growth was 5%, so now it's 25%, and the overall average of the growth in markets like 15%. I mean, who knows what that means? But anyway, a decidedly different tone in terms of what autonomy. Look, I think autonomy has just begun. There's a New York Times article that highlighted the safety issues with having a human driver in there, what autonomy provides in terms of safety without having the risk of a driver, let alone the accidents that can happen with human drivers, and then ultimately the opportunity for cost and insurance charges to go down. We're so early stage in how this can expand, the rideshare market, which again represents, 1 or 2% of total miles driven in this country.
It's going to expand the rideshare market because I personally, when I'm in a city with an AV, I use it more versus walking or doing something else. But then on the other side, and Uber and Dara's talked about this, their pool of drivers is going to shrink over time. And that's something that we're going to have to watch to see, can AVs fill that in? And is there a delta gap between having enough AVs, enough humans to match demand? That's something that we're going to have to watch. And is every week you and I watch the markets, and what do we need to look for in the autonomy markets over the coming week?
Pony AI reporting, not exactly a huge company, but obviously we'll be following what they say there. Mobileye, I think, speaking at a conference. I think our good friend Don Burnett from Kodiak is going to be in New York City. Hopefully I'll be able to spend a little time with him, and who knows, maybe we see some more expansion out of our friends at Tesla.
Based on Elon's tweets, expansion's coming. The future is bright. The future is autonomous. The future is an expanding robotaxi industry. Walt, until next week.